welcome to the first event of our Sunday, the Brown Channel Summit 2023. Panel 9, Venture Capital and Financial Advisory in China, Navigating Investment Opportunities. We are very honored to be joined by two very distinguished speakers, Mr. Ming, who is the founder and managing partner of Cygnus Equity, and Mr. Chen, who is the managing director of 5Y Capital. Thank you guys for joining us. Just to start off with a question, can you tell us a little bit about your background and how you first became involved in financial advisory and also venture capital in China? Why don't we start with you, Mr. Jin?
Thank you, Joey. Hello, everybody. My name is Ming. I'm the founder and the managing partner of Cygnus Equity. We are a leading boutique investment bank, also called financial advisors in China, focusing on the new economy industries in China. I founded this company about 60 years ago. And before that, I worked for two American companies. And one of them is called Providence Equity. I'm sure you guys are pretty familiar with the name. I worked for the firm for years, and all the three founders of the firm graduated from Brown. That's the connection. So I have been to the campus. I have been to the met a few alumni of Brown. So nice to meet you guys here.
This is Chen from 5Y Capital. I'm the managing director of 5Y, and we are a leading venture capital firm in China. This year is our 15 years anniversary. For me, before I joined the VC industry, I was a software engineer working for Google and BlackBerry. And after work in technology field for a few years, I decided to go to Harvard for my MBA. And after my MBAs, I returned to China and joined the VC industry. 5Y is my first job in these sectors. And my focus is mainly around AI, robotics, self-driving, and technology domain. And basically, I was an engineer turned investor.
All right, great. Moving on to the second question. How has the venture capital landscape in China evolved over the years? And what are some of the trends that you're seeing currently in China? Again, if we can start with you, Mr. Jin, that would be great.
Sure, thank you. I joined this so-called venture capital or private equity sector in China in early 2008. Before that, I was the investment banking in Hong Kong. So back to 2008, or if we go even further, in the middle 90s, when my ex-employer Warburg Pincus first came to China, and it was one of the earliest foreign investors came into China. I think from middle 90s to 2010. I think that's I would call it like the copy to China stage. Many of the like the innovation or the investment are following the US the trend. I think 2010 or 11 will be the switching point where the mobile internet came out, where we see more innovations out of China. First innovation in China. Like the Meituan, and this kind of TikTok, this kind of new innovation, I think initiated in China. Till this kind of a trend probably sustained till last year, 22, due to the COVID. I think the market has changed kind of dramatically. Many of the foreign investors dramatically reduced their investment amount in China, and this year, definitely this have been changed, but it's still too early to tell how far this can go.
I joined this industry in 2017, so has been working as a VC for around 5 years. The most significant trend I saw basically since 2017, the growth of mobile internet almost plateaued. And we are seeing more technology-driven startup and technology-driven opportunity rather than the business model innovations for the past few years. Along with this trend, we are seeing the market is become more mature in terms of the competition becomes more intense. We have more startup and more venture capital firm competing for less and less opportunities sometimes. So the competition become increasingly competitive. At the same time, the valuation gets significantly higher for the past few years. I think we have similar trends in other parts of the world, such as the US, that some early stage startup get a really hefty valuation at a very early stage. It's probably because there's too much money in the market right now. And also on the VC side, we're seeing more mega fund and larger fund with more AUM. So many funds start to have a more comprehensive coverage from very early stage to growth stage. And we are seeing more and more VC funds are starting their seed investment. And we're also noticing more PE funds entering VC stage. So the competition become much more comprehensive for the past few years.
Thank you. I know you two mentioned technology as an industry that you see to be quite promising in the future years. But overall, how do you see the Chinese market evolve in recent years in terms of investment opportunities? Would you still go for tech, or are there any other sectors like healthcare that you think would be a huge opportunity moving forward? Yeah.
I think there are many sectors that are popular to VC guys. We have the technology, we have the so-called hard technology, mainly the technology with manufacturing, and also software or AI in a healthcare, definitely, and a consumer. I think these are the four major sectors that the typical Chinese investor would look at. I think all of them, I personally believe all of them have opportunities in China, but they are in different cycles, different position in the cycle. Currently, I think the so-called hard technology definitely is on the booming trend, including like the semiconductors, the automobile, especially the electronic automobile, and we call it new energies, like the solar, the wind. I think many of them have opportunities, but they are different position of the cycle. If you look at the, I think the new energy side, they're definitely also on the booming. But you look at the software, so-called SaaS. I think it's similar to what you guys probably see in the US. I think they are probably at the bottom right now. For healthcare, I think similar situation due to the regulations in the last few years, which is a kind of a headwind. So the healthcare right now is not in a very popular stage. Yeah, so I think all these four sectors will have opportunities for investors in the future, but we just need to analyze where they are and and think about when you want to get in.
Yes, I want to echo a few points Mr. Jing mentioned. I think for the past few years, the obvious trend we're noticing is that some traditional venture capital investment opportunity are becoming less and less, especially those opportunity around fast-growing mobile internet, something to do with e-commerce or social network. Those kind of opportunity are become more mature. So as a VC investor, we are exploring more growth and more newer investment areas such as semiconductor, renewable energy, and most recently, for the past 1 year or two, there is a renewed interest around artificial intelligence. So those areas are attracting a lot of interest and a lot of money. At the same time, we notice in Chinese market the RMB fund become more mainstream for the past few years. So we see more domestic substitute opportunities, especially around certain high-end hardware and high-end software. Those opportunities are not that popular if we went back 5 or 6 years, but now it's become much more mainstream.
It's really interesting to hear about the emerging sectors as well as the diminishing returns of some of the traditional sectors. My next question is, what role do you think government policies play in the investment landscape in China? Because I know one example is a while back, China's changed its stance on education policies in terms of having 补习班 or after-class academies, and that changed some of the future of some of the companies that we see in China. So again, what role do you think the government policy plays in China, and how can investors carefully navigate through these changes and maybe foresee some of these changes?
Yeah, Peter, do you want to go ahead first?
This is a difficult, tough question for me, I guess. And I noticed Joey mentioned the education case particularly. Fortunately, our fund has a minimum exposure in that sector, but I do understand the concern around some of the government policy influence over certain sectors or certain industries. For us, mostly we're trying to play along with the government policies and recommendation at certain trends. So try to avoid certain sectors that might be more exposed to the government policies. For example, in our case, we have a minimum exposure in education and very minimal exposure in fintech. Those areas that could come under more government scrutiny. And at the same time, there are many sectors that are more encouraged or benefit from the government policy or the government regulations. For example, investment into semiconductor, into certain high-end equipment, especially if it's more around domestic substitutes thesis, particularly for the past 3 years, as we are seeing more increasing and tension between certain countries. We see increasing needs for domestic companies to develop their own high-end technologies. So around those areas, we may see more government encouragement and government support. So those areas, especially if we are investing in RMB fund, we will be more cautious and be more active in those areas.
Yeah, I think government is playing more and more important role in the investment world, not only in China. I think it's kind of worldwide. If you look at how the share price or how the market is moving in the United States in the last year, it's less relevant to the company performance. It's more relevant to the rates that the Fed is announced. So I think the government is playing more and more important role around the world. And it's I think it's the same case in China. Sometimes it's a tailwind, sometimes it's a headwind. Yeah, definitely, as Joe, you mentioned, what happened with education, with tutoring, is definitely the headwind. in healthcare industry as well. A few years ago, the government published a so-called group buying the policies that hospitals will purchase the medicines or equipment at the price set by government. So which will be a very low price and cut the profit for the suppliers. I think we can't say that these policies are stupid. I think in certain ways, I think they're very valid policies. Like for the healthcare, the intention of the government is to reduce the cost of the great population on healthcare. I think this is a good point. And for tutoring, the same story. Probably you guys know, the Chinese kid will spend like 2-3 hours every day on tutoring, which is definitely not healthy for the kids. So I think the why the government initiate these policies, I think we do understand. But the hard part is the way they do it, or it's hard to anticipate or forecast how they will do it. This will be a challenge for the investment sector. So if we can foresee what the government will do with education or healthcare, we can make our decisions based on this. I think the challenge is it's very hard for you to foresee this. On the other side, as Peter just mentioned, in certain sectors, like the renewable energies, like the semiconductors, there are a lot of support from the government, so which help the industry to grow. So on this side is how can you grab this opportunity? Don't miss this opportunity. That's another kind of challenge for the investor world.
Perfect. Probably the after-class academy came in a few years later for me. I certainly grew up having to learn 2 or 3 hours of actual work after class. But anyway, can you give an example of a very successful investment they've made in China, they've been a part of? Because we all know VC investments can be very much like a roller coaster ride. And sometimes when you get a project right, you feel like you're on top of the world. What's one of those projects for you guys? Or what's one of the biggest deals that you've made that you're so proud to share with our students around?
I can start first. I would say one of my most successful investment so far happens in the robotics areas. So I invest a warehouse robot company called Hi Robotics in year 2020. Now they have grown into one of the top, probably the top 2 or top 3 warehouse robots in China, and they're on their way to rapidly expand overseas and having hundreds of, if not thousands of customers around the globe. So that would be my most successful investment for the past 3-4 years. And the reason for their rapid growth, not only because they have a young and talented team, the management engineers, but also they benefit hugely from the growth of e-commerce, as well as the post-pandemic labor shortage. So Hi Robotics, they invented a novel form of a robot working for the warehouse to help the automation of warehouse operations. That kind of robots we see widely used in Amazon warehouse, but they invented a new improved form that distinguished themselves from dozens of competitors in China as well as globally. That's the reason they can stand out from the competition and grow very rapidly. So for the past few years, I made several investments around robotics as well as self-driving companies. I think the technology is becoming more mature, and the adoption is continue growing rapidly. And Chinese startup has a huge edge in terms of manufacturing capabilities, in terms of software development capabilities. So those are the areas Chinese company show their worldwide competitiveness.
Yeah, thank you, Peter. From my side, I think since my major role is an investment banker for the last 6 years, so I probably give you an example of investment banking deal I've done. We have closed more than 100 deals in the last 6 years. There's many of them I would be proud of, especially this one, it's called NetEase Music. You guys probably heard of the company called NetEase. It's the number 2 online gaming company in China. It's listed in the States. And they have a subsidiary called NetEase Music, which is a kind of a Spotify style business. It's a number 2 player in China. The number 1 position belongs to the other technology company called Tencent. So we got the mandate a few years ago. NetEase Music is number 2, while the number 1 is extremely strong and competitive. So how can we help number 2 to raise capital and to build up a strategic partnership? Just tell you the result. Eventually, we help the company to raise nearly $1.5 billion cash to help the company to grow. And also, we help the company to bring in strategic partners. The other 2 very famous Chinese technology company, Alibaba and Baidu. We help NetEase Music to bring in Alibaba and Baidu as strategic partners, so that the company can be stronger to compete with the number 1 player, Tencent Music.
Great. We're going to pivot the question a little bit. Mr. Jin, you mentioned that you've managed to secure so many deals. And the question goes to Mr. Chen as well. When you're working with different folks, when you're trying to strike a deal, or when you're trying to invest in a company, when loads of other VC firms are trying to invest in a particular company, what are some of the qualities that will make you think make the company stand out in terms of securing a deal, or in terms of dealing with the people aspect in your job? If we can start with you, Mr. Jin.
Yeah, so you mean how can the company stand up with the to compete with the competitors?
Lessons that you can impart onto our students when you're dealing with people in your job, when whether you're trying to strike a deal with a company, or just the people aspect of your daily tasks.
I see. Yeah, I think people is always important in the investment world. So from my perspective, when it's the same example, the NetEase Music. So when I first get in touch with the company, there are many other global banks, like the JP Morgan, or this kind of a global leading banks also competing with us on this deal. I think from investment banking perspective, especially investment banking service pre-IPO is a very sophisticated process. So you have to understand the company needs, what the CEO want, what the chairman want, and also what's the best solution for the company. Like what I just mentioned, for this company, they are not only requesting for money, because NetEase is really cash rich. But they also want friends, they want a strategic partnership with the other people. And fundraising is a good opportunity to build up this, strategic partnership. You can't just, to Alibaba guys say, okay, I want to have a beer with you. not a very important topic. So fundraising is definitely the opportunity to build up the friendship with the top guys. So we we understand this very well. So we make a proposal based on this, and eventually I think the fundraising process is it went on really like what we planned. So I think that's how we compete with the others, and how we deal with people.
Yes, so I want to share my experience about Joey's questions. So in the VC world, especially in the early stage VC investment, the relationship with the entrepreneur is critically important, especially as market become more competitive. Now we have more VC firms, more VC investor chasing for fewer high quality deals and high quality companies. So for me, the strategy is always try to build a long-term relationship, become the entrepreneurs like real partners, benefiting their growth, helping solving their problem, instead of just become a financial investor and just try to make some money out of it. So for me, one of the most important principle is trying to really make money from your knowledge in this industry, in this business, rather than creating more information asymmetry, or try to use all kind of trick to force the investment or force a deal. That is not my style, and that does not align with my long-term strategy. Especially in this market right now, we see more competitors. They are really aggressive in terms of investing in some early stage companies. For that reason, I will always try to make a close friend or make a strong relationship with the founder itself, and help him to understand and explore the possibilities with different kind of investor, and help him to figure out what kind of investor and what kind of partner fits his or her current need, and try to become his trusted partner from very early on. So that is basically my strategy and my style.
No, I agree 100%. And maybe like Machiavelli is wrong to say it's better to be feared than loved. Probably it's best to be respected in the world of finance, especially in financial advisory and venture capital. Speaking of building relationships and maintaining relationships, I actually worked for Mr. Jin for one summer. Aside from being just the best boss and the most crisp and well-spoken person I've known, it's incredible to walk into his office and see it's really a family at Cygnus Equity. So I'm wondering if Mr. Jin, you can speak to your experience of building up Cygnus Equity and sort of the culture and the relationship and the talents that you seek out to cultivate when you're starting from ground zero to build up such a great company in just a few years.
Thank you, Joey. It's great to have you with us for one summer, and I'm really impressed. And also very impressed, especially when knowing you're going to Brown. I used to work for Brown graduates for 4 years. I think for my company, after leaving Providence 6 years ago, I decided to do something, kind of a startup. Initially, I wanted to do venture capital. I was, 2016. I believe it's too late to set up a venture capital then, because their competitors are so strong. So I decided to go with the investment bank, because there are not many investors going back to do investment bank. So, since there are not many people to do this, I'm just go ahead with that. So I think in these years, it's I think the initial few deals are relatively easy for me because I've been working in this industry for so many years. I know many people and people trust me. But to build up a company is so hard. We grow up from like 3-4 people to right now 50 people in the office. Because we are not a big name like a Goldman. So how to attract the top talents to join us? It's quite a challenge during the process. But we managed to do that. I think we built up I believe a good reputation in this sector. The investors trust us, the entrepreneurs trust us, and if you are a new employee, if you ask around, many people have good things about us. So that's the way we can attract. We can compete with these top banks for these smart young graduates.
Great. And to you, Mr. Chen, when you're joining a company, what are some of the most important qualities in terms of culture that you look for at the company? Is it camaraderie? Is it compassion? Is it a sense of family? If you can speak to that as well, that would be great.
I think the VC industry, for me, joining VC industry really resonate with my passion for entrepreneurship. I was an engineer for many years. I always want to start my own companies, but I realized my knowledge combined with my training and my experience can greatly benefit and help early stage startup to grow. I feel a very strong sense of achievement and fulfillment by practicing this. For this reason, when I choosing or joining a VC firm, I really emphasize the company's support and long-term vision with the entrepreneur themselves. There are too many firms and too many investors in this market. They just want to make some quick money out of the deal, and they have no true passion for the particular sectors or particular passion for the entrepreneur themselves. So what they will end up doing is following whatever is hot in the market. They are shifting their focus year by year, and they probably invest companies for the past 5 years into 5 sectors. I won't be doing that. And if my firm allowing the investor to do such a things, I won't view them as a good company emphasizing the long-term growth and the long-term values. So that would be my primary principle in joining or selecting different VC firm to join.
Absolutely. And so many qualities that 5Y Capital embody and carry with them as well. So if any of the students here would like to go back home and join a venture capital company, that's probably also a firm to watch out for as well. Going back to, we have many foreign students here today also who might want to pursue a future career in China, in investment, in finance. But what are some of the challenges that you see foreign investors may face when they are investing in China because of this sort of lack of understanding, maybe of the culture, or just the general knowledge of the country in general? Do you see that there are any challenges when they come to invest in China? If we can start with you, Mr. Jin, that'd be great.
Sure. Because I started to work for Warburg in 2008, and Warburg Pincus is the typical foreign private equity firms that is succeed in China. I think in the early days, even before I joined this sector, there are a long learning curve for the foreign investors. The local regulation, the local culture, the local team. There are many challenges for them. But I think the leading players started to learn how to survive and develop in this situation. So I think the short story is, to hire more Chinese talent. Like the local partners, majority of them are Chinese, but many of them got an overseas education background and worked for the other international institutions, especially the investment banks and the top consulting firms. But they also, understand the China market. So I think after that, probably in the 2005 to 2010, I think roughly in that period, I think many of the global players learn how to work in China, and it works very well till I think recently. I think COVID is a new challenge. I think there are several challenges. I think one thing is it's not purely relevant to COVID. It just happened in the same time that I think the internet or the mobile internet, the opportunities in the mobile internet is getting less and less, which means in the mobile internet there are many business models in China or in the US. They're similar. So if you are good investors in the US, it's easier for you to understand what's happening in the Chinese mobile internet sectors. But I think right now there are less and less opportunity in this sector. While talking about the other sectors, like the manufacturing, like the consumers, or even healthcare, the difference is bigger. So I think the new challenges for the foreign investors to learn, especially for the investment committee, who typically sit in the US, to understand these new sectors. I think this is a big challenge for them.
Yes, I want to follow on Mr. Chen's viewpoints. I think one of the big challenge for foreign investors, and one common mistake investor may have is having this copy to China mentality. We see a lot of internet startup succeed due to the copy to China formula. Like when you see something successful and big in US, you copy that model, copy the product in China. I think that opportunity arbitrage is becoming less and less. So for the past few years, we see many, for example, SaaS companies or some cloud native companies. They try to become the Chinese counterpart for their US successful company, and many of them didn't play out that well because the market condition, the customer profile, and the paying habit, the infrastructure, many things are quite different from US. So you cannot simply, especially in some non-traditional sectors, in some non-consumer internet sectors, it's becoming more difficult to just copy some exact business model into China and hope they will become successful instantly. So those are one of the mistake I saw a lot of foreign investors continue to have.
Great, thank you for that answer. What do you think are some of the unique challenges faced by investors in China as opposed to other countries? And how do you see that investors can navigate through these challenges? If we can start with you, Mr. Chen, that would be great.
You mean some unique challenge Chinese investor may face?
Yeah.
there are many unique, there are many challenges we are facing these days. One particular thing I can probably align with my previous point. A lot of opportunities can be achieved with a startup in the US, but it's much more difficult for Chinese startup to complete. For example, we see many $1 billion, tens of $1 billion startup in the US around the SaaS domain. All kinds of SaaS companies, cloud native company, they become extremely successful in the States. And those areas are much more difficult to succeed in China. One of the reasons, not to mention the consumer paying habit, the company paying habit is different from the US. Another critical reason is that many potential domain, many potential SaaS domain may attract competition from the internet giants companies, Tencent, ByteDance, or Alibaba. They may offer free software in certain areas just to attract more customers into their ecosystem. But by doing so, it will eliminate the opportunity for startup to grow big and become profitable. So because the Chinese market is overall more competitive compared with the US, it puts startup at a higher pressure to find their unique edge and unique niche, not only competing with more traditional vendor, traditional player in the sector, but also defend themselves if some larger companies, internet giant company, entering their sector or their market. So that would be one thing I noticed in my investments.
Yep, and for you, Mr. Jing, what are some of the unique challenges you see Chinese investors face?
Yeah, I think something unique is the I think for the Chinese market is the peers competition. You guys probably know, typically Chinese works very hard. It's the same story in the investment area as well. I think the Chinese investors, including Mr. Chen, work very hard, and they compete very hard with the peers. It's like all the way on the value chain. Starting from the sourcing, due diligence, and the valuation and the terms. So people works very hard to compete with each other. So if there are some good opportunities, you got to move very fast and be very professional, and probably have to offer a very good term to them. So the market transparency is getting, I think, better and better, which means the competition is also getting harder and harder. So this is probably something that is different from the other market.
Yeah, absolutely. I think we're going to open the floor up to Q&A questions from Brown students. So would you like, Patrick, do you have a question?
Yeah, thank you both so much for spending time to talk with us this morning. My question is for Mr. Chen. I was wondering, seeing as you went to Harvard Business School, what kind of takeaways or what big lessons from Harvard Business School do you think really have applied to the work that you've done in China? And are there certain areas where some things that you may learn there don't apply at all, or there are limits, or it's a completely different way of looking at things?
That's a good question, and so if you ask this question to me 5 years ago versus today, I will have a different answer. 5 years ago, when I first joined, after I graduated from school and joined this sector, I feel that the world is changing so fast. The startup, they don't follow the established rules. Those things you learn in school don't apply to the new innovations. So I got my job, as my boss told me, I got my job because I was a former Google engineer, not because I'm a Harvard MBA. That's the funny part. But after working in this sector for 4 or 5 years, I start to realize a lot of things I learned in school, the case study, the literatures, the readings I done, the discussion I had, really had some impact in the way how I analyze and understand business. I won't have that feeling when I first graduate. I feel a lot of things I learned at school, it's not that relevant to my day-to-day or my early career in this sector. But as I developed more, I realized a lot of companies' problem, the managerial problem, the business model problem, we all study at school. It's just at that time, without a proper exposure or without a good context, it's really hard for me to grasp all those learnings in the business school. So to sum up, I would say it really helped me to transform my mentality from engineer into a investor. But the benefit only show up after few years and really competing in this arena and paid my lessons and paid my tuitions.
Great. Tyler.
Yeah, so I've always been interested in the VC space, and one thing I really appreciate about the VC is like how you work with the company itself that you're investing in to like try to build their company up, and it's very early stage as well. So I was wondering, like, what are some challenges that you face when you're dealing with the company that you're working with? Because I'm sure there's some ideological differences that you as an investor have, and the company as they're building up have. So what are some challenges that you face when you're kind of like working with the company itself?
Can we start with you?
Yeah.
Yes. So
Go ahead, Peter. Yeah.
Yeah. I can share my experience. A lot of people think there is a by definition conflict of interest between investor and entrepreneur. Sometimes especially in the venture market domain, investor really want to hunt the giant, hunt the whale, find the most successful companies, and doesn't care about all the losing ones. So for that reason, the investor generally push entrepreneur to grow as fast as possible, and by exposing to a lot of risk, in reward, aiming for higher growth. So by definition, there's a lot of tension between the investor and the founders. But for me, the way to eliminate this kind of tension or this kind of conflict is to really get to know and get to bond with the founders early on. Even if I didn't invest the company at their earliest stage, I probably become an investor in later stage. I still want to become their good support, become their good friend, understand their concern, and help them to navigate some difficult situation and difficult time. Because for me, I understand the most successful investment is always very long term. A successful company has a very long duration to grow, and I don't want to just take advantage of the short-term benefit of company's growth. So for that reason, the important thing is to build the trust, build the support, even if you didn't invest them, or even if you are not the biggest investor on their share table, but you want to make sure you become his close friend and understand his concern, and in reward, you will have more understanding of this company and being able to support this company in long-term durations.
Yeah, to echo what Peter just said, so we as the financial advisor, we kind of intermediaries between the VCs and the startups. There are many, I think there are many things they share with each other, like how to grow the company, how to achieve their first dollar revenues, how to make a great product, how to build a great team. I think from this angle, we share the same view. But what I typically see that I think the most difficult part is to make choices when you have limited resources. For example, if you only have last $1 million in your bank account, you have several options, and there are risky ones and the more conservative ones. And the investors, I think, sometimes will push you to choose the risky ones. You have less probability to survive, but if you survive, you will be a great company and they will have a great return. But for the entrepreneur, for the founder, if you lose, you will lose your career, you will lose your team. It'll be very hard to face your family. So I think when you come into this kind of a situation, I personally think this is the most difficult part, both for the entrepreneurs and also for the investors. And they typically will have different choice because they are, from different angle to look at this situation.
Barry.
Thank you, Mr. Jin. Thank you, Mr. Chen. My name is Barry, and I'm a student at Brown. Just very grateful for both of you to share your perspectives and stories. This question is directed towards Mr. Jin, but I also want to hear just different perspectives, which is you obviously had a lot of experiences both in China and US in terms of the financial sectors. And you also, not just between the two countries, but also in sort of two different fields, right? There's investment banking and just also investment in general. So what would you say in between all those different places that you've been to, what are some of the differences, some of the challenges and the opportunities that are sort of different between maybe US and China, just based on your own experience?
You mean for business or for personal?
Let's do both. Let's start with just the financial sector. And then, yeah, I mean, we are all people here, so we'd love to hear the personal side as well.
Okay. Yeah, we talk about, I think in tonight's session, we talked about the differences between the two markets. But after all, I still believe, the VC sector in China probably is the most similar one to the US. I think the other countries might be even more different. The reason is that I think the Chinese VC sector was started by many of the US firms, like my ex-employer Warburg Pincus or Sequoia, this kind of US firms, or Chinese people graduate from US schools. So that's why I think in the broader base, to look at the sector, I think these two countries or these two industries are quite similar. And so for this perspective, I think for graduates from from the top universities in the United States, it's not that hard for you to get to understand this this China, but to perform extremely well in this sector, you need a lot of migration from what you have learned in the college and to the market. I think we talked about also, Peter talked about this previously. But in general, I think we don't focus too much on the differences. I think they are majority of the industries are similar. This is, I think, for the VC sector. For startups, if you are an entrepreneur, it really depends on what sectors you are in. If you are in internet, it's still very similar. But if you are in manufacturing, then will be different because there are not many startups in the manufacturing sector in the States, but there are a lot of them in China. So if you're an entrepreneur, really depends on what sector you are in.
Great. Maybe Mr. Chen, you can speak to your experience at HBS and also your bachelor experience back home in China. What are some of the personal, more of a personal touch?
So I echo Mr. James' point. The VC market has a lot of similarities, but there are also many differences or challenges for professionals to succeed in each market. In my case, I studied and worked in North America after I finished my high school for almost 14 years before I returned to China. But I found that I adapt relatively well, relatively quickly into the Chinese market, although I never worked in China before. My college and postgraduate study and work are all happen in North America, in Canada and in the US. And the reason I believe is that because I grew up in China, I understand how people think and how people the Chinese culture better than non-Chinese investors. So for me, it's actually easier to adapt into Chinese VC market than me trying to become a professional VC investor in Silicon Valley. It will become much more difficult, especially for the VC market. You need to deal with a lot of early stage company. You need to build a close tie, a close bond with the founder than the founder community, and it's much harder for first generation immigrant or non-native native investors to become really successful and really build a strong tie into the market. So that is my experience and the reason for me to return to China and work as a VCs. And another experience I have is that the Chinese VC market, although it is booming for the past 1 or 2 decades, is still a relatively young industry. For example, in the US, the VC industry has developed for more than 4 decades. And in Silicon Valley, you have a lot of experienced angel investors. They could help early stage founders, the early stage company to navigate a lot of difficulties in funding and building new companies. We don't have that kind of resources or network in China. We don't have a network of experienced angel investors who are mainly successful businessmen or lawyers or doctors in the States. Because we don't have that kind of communities, early stage companies sometimes rely heavily on like financial advisories or investment bank, even for their fundraising and other kind of topics. So it creates a much more difficult market in China, and it poses more challenges for early stage VCs like us, because we don't have a very good angel investment environment.
All right, I believe that's enough time. That's time for today. And again, I would like to extend my gratitude to Mr. Jing and Mr. Chen for coming along and spending some time with us. I'm sure all the students have really enjoyed the conversation and learned a tremendous amount from you guys. Again, thank you so much for coming.
Thank you.
Thank you, Jay. Thank you all.